stimulus money go to various industries. Airlines, of course, among them. Hospitals are also on the list. And there have been some reports that some of those hospital chains that maybe didn't necessarily need the money are funneling some of it to their top executives. What does this say about the hospital industry? But also, what about the hospitals that are closer to insolvency or are having real issues? We're joined now by Peter Kaufman. He is Gordian Group President. He looks at those issues of restructuring and bankruptcy. So as it applies to the hospitals, Peter, what do you think? I mean, did the hospitals that really need the money, did they get enough? Or was that money funneled to others that maybe even misused the funds?
Julie, Adam, good to see you again. This is, as usual, when the government is trying to dole out money, a bit of a mess. There were very few guidelines for how money gets doled out, mostly based on historical revenues and I think some portion of Medicare reimbursement. And, of the 60 largest hospital chains that received $15 billion in total, more than half have either laid off employees, furloughed employees, or are demanding reduced salaries from employees. And the CEOs are, as usual, pocketing a lot of money. They're making some face-saving give-ups of about 2 weeks worth of salary to give to everybody else. And these large hospitals are not just hospitals, they're private equity firms, they're venture capitalists, they're hugely in the money management business. And I'm sure that they're taking various forms of hits during the last 3 months because of COVID, but by no means did all of them need all this money. And conversely, I think there are a lot of mostly rural hospitals, inner city hospitals that are not getting the funds they need. But all of this is to be expected when the government's inefficient. There were no great guidelines for how to dole out the money.
Hey, it's Adam, and it's good to see you. So I'm curious, though, and that New York Times article, which highlights this, I'm looking at one part of it where it talks about, I think it was Tenet Healthcare, got $345 million from taxpayers, their CEO, and by the way, they had laid off 11,000 workers. Their CEO donated for 6 months money from his pay package, which is $24 million a year, and what he donated is about $375,000 a year. So we get the point of those kinds of numbers, but what recourse is there? The government's not going to go claw back that money, is it?
No, there's really very little recourse. I mean, some firms are being shamed into returning PPP money, but it's a much smaller amount, and I don't think anybody should expect for a wire to be coming from the hospitals, back to the government.
Hey, Peter, Rick Newman here. I'll follow up on that. So in the Democratic primaries before Joe Biden clinched the nomination, there was a lot of discussion about healthcare reform and should the government have a more active role. I think it's fair to expect that's going to be something Biden is talking about in the fall. And if Biden wins and he gets a Democratic Senate, Democrats will possibly have the votes to do some reforms here. So would you like to take a swag at how, if the government did have the power to do it, what would be sensible to do?
Well, I can only focus on solvency, insolvency, restructuring issues here. But I think a great first step would be to have some sanity about how material amounts of taxpayer money is doled out to the healthcare industry. And I think that what we're seeing here is it just was throw it up against the wall, see what sticks. And I'm not sure it's really done much good, if any good. And the receivers of all that money are still laying off people, furloughing them, et cetera. So I think that would be a good place to start. But I couldn't begin to opine about how the U.S. healthcare system should be reformed.
Peter, I do want to, before I let you go, while we have you, got to ask you about a different company in bankruptcy, and that's Hertz. Yesterday, abandoning that share sale, right, because it was under scrutiny. But what do you make of the Hertz situation and this phenomenon of speculators piling into these companies that are in or near bankruptcy?
Well, I thought it was a really creative attempt by Hertz to end run the usual process of if you need cash, you go get either try and get use of the cash collateral of your lenders or get your lenders or other lenders to loan you money, called DIP financing in Chapter 11. Instead here, they tried to raise $500 million in equity. And even the offering material said by the way, there's a very high likelihood you're going to lose all of this money because shareholders in bankruptcies almost uniformly get wiped out unless Gordian Group's advising the company. And I give them high credit for creativity, but the SEC stepped in and this thing went away. But it was different. It was interesting, and the speculation in Hertz stock is quite interesting to me because there is no plan of reorganization that's been promulgated or certainly publicly stated. And so no one has any idea as an investing public what, if anything, the shareholders are going to get on the other side of Hertz.
Peter, thank you. Peter Kaufman, Gordian Group President, thanks for joining us.